So now let's come into Australia. Where do you see, again, we started pretty sluggishly, terrible sort of start. The first 5 days of trade were pretty ordinary.
Yeah, look, collectively the whole world with regards to the markets itself struggled, and it has been one of the worst on record. Again, that was a flow-on effect from the Chinese and that expectation of can the world generate enough growth or reasonable growth there, and that was reflected in the fact that the IMF did cut the rates
Forecasts of GDP.
Forecasts, just marginally from 3.4 to 3.2.
Yep.
But for us domestically, I don't think we're not similar to the conversation about the US. We're not in that dire a position. Certainly, there's a key sector or segment of our economy that's struggling, and has been in the last few years. We all know about that, but some of the transition we're starting to see that, and with regards to our currency coming off into the 70s, low 70s, we're starting to see some of our export numbers pick up, and we'll probably see that in the incoming tourism traffic as well.
Correct. So low Australian dollar, free trade agreements, some really big ones in there. Then you also had that, mega deal and that free trade agreement between America, China, and all of the sort of some of the Pacific nations, Australia and so forth. Really good stuff. I'd love to see government spending slow down. I'd love to see us focus on a bit of debt reduction from a government point of view as well, which is some tough decisions. But when you've been in positive economic growth for 25 years, a lot of people don't realise how hard it can be. So, they think, oh, well, the money's there. It's we're spending money we don't have. So I'd like to see that slow down a little bit. Broadly speaking, in the actual economy, construction is going to continue to keep growing as we saw those permits start, the planning approvals start to come through. I think that we'll have strong construction. Got a view on that?
Look, I think the housing or property related construction has been one of the key components of propping up the Australian economy,
transitioning from the mining,
given the mining sector. So it is a critical factor in maintaining the growth. Obviously, there's concerns about property valuations and so on and so forth, but really that's limited to probably 2 cities in Australia. But it doesn't necessarily mean that the whole Australia is going to struggle.
Nor will each of those markets go terribly. There might be a certain type of stock. We've talked about it before, medium and high density apartments we're worried about, but that can change sentiment in terms of the horror stories that we might hear. So from an equity markets point of view on the Australian side, or more broadly, I didn't give you a chance to talk about where you see ranking the economy. Where do you see it?
Look, the Australian economy is probably more similar to the US, I think, in that we're positioned probably around that 6 mark. So it's not as bad. However, our stock market, on the other hand, it is very much linked to the Chinese story. So we get pulled left and right, pillar to post, depending on external factors. In terms of our reporting season, similar to the rest of the world, our reporting season is subject to cost cutting. So concerns on whether or not revenue will tick up and profit margins go up that way, or whether it will be continued cost cutting.
So obviously we spend a lot of time in investing in the Australian markets, but we also invest overseas for our clients. Where do you see the opportunities in the local market for our clients this year?
Look, certainly if you have the conviction and the confidence, if we're looking for value, then obviously that is in the materials and energy space. But certainly it's for someone who has certainly a lot of confidence in the recovery in that space, versus the plodding along of the industrials and those sectors are generally doing okay. So we should still be able to pick up our probably +5s in that.
But you make a good point that predominantly we're out of the market. Is that a fair position to say?
Sorry?
We're sort of, in terms of our investment rated risk in terms of equities and share market, we've got investments in other alternatives.
Look, tactically we first half of last year we took some profits and we sat out, increased our cash weighting. In the dips, unfortunately, there was quite a lot of volatility late last year, but in 2 key data points, we did buy back in,
Yep.
to the point that we bought back in and reduced our cash levels, so that we got a little bit left in the reserves,
Yep.
just waiting for a little bit more clarity.
Yep.
But I guess when we tie it back to the rest of, with regards to the global investment world,
Yep.
having the benefit or having the ability to invest in other markets is an attractive proposition, especially given that we're talking about, one thing we know is that the Chinese are growing their consumer component of their economy.
Yep.
And even in Australia, we no longer have, I guess, the mining and materials sector is no longer providing what the Chinese necessarily want or are prepared to pay for.
Yep.
But we're seeing it on the other side with regards to services and other products. So
yep.
on the flip side, we see things like Blackmores and the
yep.
milk products,
yep.
which is a services
yep.
product to
yep.
the consumer. So it's repositioning the portfolio and the holdings to really target
the opportunities.
The opportunities.
Yeah, okay. So wrapping up, 2016 could be a bit of a bumpy year, bit of volatility still, no clear direction.
I would expect that this one would probably be a little bit more volatile because we do have a little bit more geopolitical risks in
yep.
there, and a little bit of lack of clarity.
Okay, so it's probably a tread carefully year. Michael and the team will be making sure that we hopefully get it right. Like all of these things, some of them are very difficult to predict, but that's exactly why we're paid, to look after you in the best way we possibly can. So we wanted to thank you for watching this Outlook video presentation on the global economy and also the equity markets. And if there's anything we can help you with or answer any of your own personal questions, feel free to reach out to the team at inquiries@empowerwealth.com.au. Or you can also go onto our website and watch some of our other videos that we have in regards to our financial planning area, but also our property and wealth creation areas as well. Thanks for watching.